Well, there was good news and bad news out of Europe last night, but the Australian share market turned its back on all that and focused instead on China, where the government foreshadowed more economic stimulus. Now, markets had been starting to factor in a deeper slowdown than expected in China, but it looks like a new bout of spending is in the works. As a result, mining stocks went up 1 or 2%, as did the banks. And there was some interest in Fairfax after Gina Rinehart said she'd bought a few more shares and gave the chairman, Roger Corbett, a pretty juicy raspberry as well. So something might happen there. And Stockland fell the most among the leaders. On Wall Street and in Europe generally, markets were weaker last night, although there was a big rise in Athens because polls are suggesting that Greece won't exit the euro after all. Last night's bad news was that Spanish bond yields reached a post-euro era high because of a massive €19 billion bailout of its second largest bank. Spain's government said everything's fine, we won't need anyone's help, but the markets are not so sure. In general, European shares are now trading at a big discount. Now, this chart shows the average price-earnings ratio valuation in Europe and the rest of the world. Europe's companies are selling at a 40% discount. Now, that sort of valuation usually precedes decent returns from the shares concerned, if you're game enough. Today's economic news was new home sales for April, partially regaining what was lost in March's big fall to an 11-year low. Now, there was another interesting statistic that came out of this. The number of people per household is rising. Not exactly mattresses all over the floor yet, but certainly a reversal of the previous trend. And finally, the Australian dollar is steady against the US dollar and up slightly against the rest. And that's finance.